Holiday weekends usually have me thrown off on what day it is, but you throw in a holiday weekend in a major world pandemic, and once again I become quite confused. But it is Tuesday, and I hope everyone's week is off to a great start. Well, after listening to me pontificate over a lot of different topics related to COVID-19 over the weekend, we're going to get back to real estate tonight. I was doing some data research this afternoon, and I just saw some interesting trending that I wanted to share with you. Over the course of the last 2+ months, I've definitely tried to show us different types of insights on where we think this is going, or what gives us confidence, or what gives us fear, or what I think is working and what I think is not. Well, today when I was doing some research, I saw just another kind of indication and sign, a pattern, so to say, of where we're starting to see our market perform a little bit more successfully. Now, throughout this, I know I've been pretty consistent, aka a broken record, about talking about how our different markets have been performing very differently. But we saw that in a lot of our city markets, especially in more popular locations, I concentrate a lot on kind of the South Loop North, so North Side plus the South Loop. We saw in a lot of these neighborhoods that the under $400,000 to $500,000, depending on kind of where you were, but under those price points was performing very well. Those markets were selling relatively well. They were competitive, they were cutthroat, not a ton of inventory in most spots. And we saw a real success to that, and where the numbers obviously all rescinded in terms of the number of transactions, that market felt like it had a really good pace to it. The market from 500 to $1 million felt very, very dependent on what it was and what it is. A well-priced single-family home in a desirable neighborhood in that price point feels like it's moving very quickly. A newer construction 2-bedroom, 2-bath in Lincoln Park that is a little bit more readily available doesn't feel like it's moving quite as much in that middle realm. And then I had originally kind of called it the above $1 million, but I should really quantify it more of like $1 million to $2 million market, $1 million to $5 million. That market felt like it was essentially put on pause. Now the market above that market, which we don't talk too much about, but that we kind of joke and say the upper echelon, that market's actually been performing quite well throughout the country. We've seen a real rise and a push in luxury homes, especially kind of resort style. And I'm talking about kind of the real upper echelon. They're not as concerned with what's happening now. They're looking quality of life. But essentially that $1 million to $2.5 million, especially condo market, it felt like somebody pushed the pause button. Single family homes too for a little bit, but definitely that condo market in the city felt like it just stopped. Nothing good was happening, nothing bad was happening. It just felt like nothing was really happening. Now, I was doing a little bit of research on a home today, and I started to kind of track some of the differences and kind of track, and I went into a rabbit hole, in fact, on it. And what I started to notice was some of the trending with where we're seeing that market start to loosen up a little bit more, have a little bit more success and breathe. So I wanted to kind of concentrate on that. I'm going to kind of throw some data at you. I'm going to read because I put together my notes. Now you may laugh at me. My notes are actually written on an old check registry because in this day and age I struggled to find paper and a pen in my household. Anyways, just to give you a baseline, I took a lot of our more popular, sought after neighborhoods, Loop, West Loop, Bucktown, Wicker Park, Lincoln Park, Lakeview, Lincoln Square, kind of went for some of our more popular north side areas, and I concentrated on just condos. We wanted to keep something consistent, between $1 million and $2 million. Now, if I look back to 2019, just to give us a baseline, in March 2019, we had 46 condos in all of those neighborhoods between $1 million and $2 million go under contract. In April 2019, we had 64 condos go under contract. And in May 2019, we had 35 condos go under contract, just to give us the baseline of how that market tends to perform year over year. So it's not a huge market if you think that I've got a bunch of areas in there, but it's a market that does pretty well in itself. So then I started comparing it to this year. In March, same areas, same market, 26 condos went under contract in March. Now, the more interesting data point on that is that 22 of those 26 went under contract prior to the stay-at-home order being announced. So that once that stay-at-home order was announced, 4 condos went under contract that month. Fast forward to April. April, the entire month, which the previous year saw 64 condos go under contract, saw 14 condos go under contract. Now, even more interesting, only 2 went under contract during those first 2 weeks of April, which we've started to kind of really narrow in on, as that was the time in which people really, at the end of the March, the breaks were still kind of slowing down. It stopped in April. But the second half of April, we saw some growth there. May, so far, this month moving forward, which is traditionally a month that we see things start to slow down a little bit more, we've already seen 19. So last month we had 14. This month we have 19, and we still have a week left in the month. So I thought that was all just really interesting data. And this is kind of supporting what we're seeing, but actually factual. It's not just me saying, hey, showings are up. Hey, contracts are being written. This shows us legitimately a market sector that had essentially, for those of us that are older, hit the VCR button, pause, hit the DVD player, hit the CD player, whatever it was, hit the pause button. This market is starting to show more signs of life and is starting to actually be successful. So we've seen showings in the past few weeks. We're now seeing more and more contracts come in that. And I think that just, once again, is a really good sign as we're moving things forward, as the economy is starting to breathe a little bit more. And I just figured it was a good thing for me to share tonight. Anyways, as always, if you have any specific questions about your situation, because I talk about things very, very surface level, please feel free to reach out. As we move forward in the week, let's remember to be kind. Be kind to yourself. Be kind to one another. Take care of yourself. Take care of one another. Remember to be grateful for all of our first responders who are still fighting an amazing fight for us. Remember to be responsible and smart in your social distancing. We are doing this together, and I am honored and grateful to have you as a part of my team. I will look forward to seeing you tomorrow night. Be well.